all figured out. We're good.
All right, so we just have fun from now on.
Yep. Happy hour every day.
Yeah. Well, that's the thing about trading. It's one of the things I like about it is you never truly fully figure it out. It's an interesting line of work where it's always challenging, no matter what you have accomplished or what your experience is. It's always a puzzle. There's always a bit of mystery to it, and it's always a business of probabilities. It's not routine. Some jobs you show up, you hit the right buttons in the right sequence, and things work, and you get your salary. Like being a pilot. I used to fly airplanes. It turned into that basically. But trading, of course, is very different. And that's one of the beauties of it. Keeps you challenged and engaged. In that way, it keeps you young as well. Keeps you sharp. You never actually have the opportunity to slack off. You got to stay sharp. And on days when you're not sharp, you shouldn't be there. So, best work in the world, man.
I actually think that the hardest part is being okay with all of this. Being okay with the things not being the same all the time and dealing with the changing nature of the business. Being cool with it.
Yeah, that is one of the harder parts. Yeah. And that's a bit unusual, right? Because we come from the modern world and modern education and the modern rat race and whatever, which is all about do your job, get your salary, and you're trained for that. And just like we said, this is the opposite. And then to be okay with the opposite of how you've been conditioned, that's tough. But once you get into the hang of it, I mean, it's the best thing in the world. You really do work for yourself. I mean, really work for yourself, because even if you are an entrepreneur and you have your own company, you still don't really work for yourself, because there's a lot of elements of employing others. And a lot of times you get into quarters where business is tough, but you still want to keep it running just to be able to pay their salaries, because if you don't, they got families and stuff. So you even end up working for others in that sense. But this is the ultimate self-employment, I think. Which again, yes, being okay with it is challenging. There's so many reasons to just not do it. It's just so the opposite of everything we know. But best thing in the world. And the thing is, once you get the hang of it, once you get the flow of it, or at least once you've done it for a few years and been able to sustain yourself and your family with it, that's it, man. You're never going to do anything else. You just, because there's nothing else that comes close as far as the challenge is concerned, as far as the freedom is concerned, as far as the opportunity is concerned, even the opportunity to make your own schedule. You want to take 3 months off, no big deal. Take it off, clear your head, do whatever you got to do. So even in those respects, it's a very interesting line of work. And with that, you gotta, of course, as we know, accept losing your own money and making your own money. It's the losing part that, again, most of us are not trained for. How do you accept those 3 months of losses in a row? The whole quarter, you just basically lost money, not a single winning trade even. But you still come back and do it. Do the right process. It'll be okay. So, bit of psychology for you. It's never an easy business, but it's certainly, like I said, once you get the hang of it, it's certainly one that makes you want to get out of bed every day. I think that's a good element. It's quite healthy in that sense. If you keep it healthy, if you're just doing it for the gambling aspect of it, well, then go to Las Vegas. You don't belong here. But yeah, it's good. It's worth it. All right. So what are we looking at here? This is the MES again, S&P futures. All right, hit a bit of a resistance area. Look where it is now. It struggled in this area previously, overhead resistance as well. Again, real-time price action is king. If you look at the price action for the last 2 days, what do you guys see? Let's just zoom into this. From down here, well, you know what, here's fun. Look at this. Went from down here to up, consolidation, false breakout, perfect hammer. And it's just been in an uptrend since. Here was that previous resistance right there. You can see here's a breakout. Here's what came back down close to a retest area yesterday. And yeah, broke the high of the previous day. We were talking about it here at the open yesterday. Remember that? As long as it bounces off of the previous day's high, it could be good. And sure enough, that's exactly what happened. And that was a 5-minute ORB, I believe, on a 1-minute chart. Went, came back, and here's your retest of the previous high, which was the high in the pre-market zone. And now in the last few hours, it's broken the high of the day already. And looks like another ABCD pattern. So everything healthy for the move continuing up. This is healthy price action where, you know, it goes up, it goes sideways, and it breaks out, then a retest again, sideways a bit, then breaks out, again, sideways a bit, retest, breakout, sideways a little bit, retest. This is sustainable. If it just keeps going up like this, you see these big candles here just straight up, well, that's not sustainable. That's when it needs to, you know, whip back the other way quickly. But this is sustainable. And this is where the big moves happen, when it's sustainable price action. And to be able to catch this, or rather to be able to catch the majority of the trend, you really have to firstly give it a lot of time to work, and then also survive these unrealized gains going away. So let's say you got in here, for example, it goes in your favor, and then it goes right back against you, right? You've lost half your unrealized gains, but then it goes further. Then again, you lose those unrealized gains. Then it goes further. Can you really do all this, is what you're going to ask yourself. If you want to be able to catch big moves, this is what you need. You have to give it time and be able to watch that unrealized P&L go in your favor and then come back 80%, then go again in your favor and then come back 80%. My trick is not watching it. Just leave it alone. And if you don't watch, you don't know what's going on, right? But
yeah, that's what I did today when I was breaking 715. I had 715 as a level, and I got in at 715, and I set the target at 70.27 and a half, and I just let it run. I didn't even look at it.
Nice. That's perfect. Let it run. That's good. That's real trading.
Because it actually went to 70.26 and then pulled back to around 720, I think, or so. 70.22, and then it went back to 70.27 and a half.
Yeah. Good work doing this. I remember you were always looking at ranges and trying to trade that, but this is much bigger, much bigger, and this is what it takes to be able to survive pullbacks. And not looking at it helps. And at this point, this is not even what is popularized as day trading, which is you're in, you're scalping, you're out. 15 minutes is considered a long time to be in a trade. This is the opposite. This is what I call actual trading, not day trading. Day trading is just a scam, really. This is trading, really making money out of the market, rather than getting just hyped up about playing with the financial markets.
I actually like how it moves. Like it doesn't give me anxiety, because every day at 9:30, stocks were giving me anxiety. This one actually, I can actually think clearly. And wait for my levels to break. I set the alert and it started ringing. I looked at it and I got in. I set my stop loss and my target, and I left it. I closed the computer. And I came back hour and a half later, and it hit my target.
Isn't that the best? You see?
Amazing.
Yeah, it feels great. It feels great to be able to do it this way. We can just leave it and go. And you're not, Yeah, you're not bothered about it. And I think the key thing you mentioned there is that whole 9:30 a.m. anxiety thing. And again, that's what's been popularized because, well, it's a good dopamine fix. And therefore, if you fix people with dopamine, then you can sell them stuff, right? Another
Exactly.
course or whatever, another subscription or whatever nonsense. Here's want to really make money? Once you start getting bored, now you're in the right headspace to make money. Because now you can interact with the market in an honest way, where your account will be grateful. Yeah, good stuff, man. So this is great. This is healthy price action, but you got to be a healthy person to be able to trade this stuff. If you're all into the dopamine, you won't be able to do this. Because look at 9:30. Let's look at the most recent open. For me, that was yesterday. For most of you, that's still today. And what day is it? It's Wednesday here. So it's Tuesday for most of you from North America. Let's go to the 1 minute action and look at this. Right about there. So here we go, the pre-market high, and then the price opened right about in this area. That's the open. And sure enough, it went up from there. But to be able to really catch the big move, like we said, you're looking at basically breakouts of the highs and then retest. And then here's a high, breakout, here's a retest. Simple strategy. But at the open, if you're watching it, you're into this candle chart. This is the 1 minute. And here's 9:30. Oh, look at this. You think it's strong, you go in, you stop out. It breaks to the downside, you go in, you stop out. I mean, this is what you end up with if you're chasing those 1 minute ORBs. You know, you may have, found one or two setups here. Oh, look, it's holding VWAP above or below or something. And then on this one, you say, oh, this is great, 5 minute ORB going down. You might get a tiny partial and stop out. This is not trading. This is just a dopamine fix again. But then we know on the bigger picture, like we saw in the 30 minute, when it goes to look back, this is the resistance, here's your breakout, here's a retest. It comes into that resistance and bounces off, right? Around 6990. So it goes down, 6990. There it is, just about there. It goes in, bounces off. And now here's where your bigger picture comes into play, right? It interacts with the level. Your retest on a 30 minute chart, this is the 1 minute, it goes. As soon as you're getting this consolidation, then you're identifying the breakout. Now you're getting into a bigger one, right? Much bigger situation, huge. And you can hold on through this rather than just looking at this. And this is what most people look at. Their charts look like this when the opening bell rings. I mean, you see this? Everyone's all zoomed in, 1 minute picture, and then they got volume bars down here and moving averages crossing over all over these candles. Again, I know this because I traded this for a number of years in the beginning. And yeah, of course you're going to blow up an account looking at this chart. Can't look at it like this. Got to go bigger. I like the 30, do whatever bigger time frame you like. And then you give yourself an opportunity to get into, much bigger positions, right? So a much better way to go.
Based on experience, most big moves, they come after 10 o'clock.
Yeah.
There's a lot of noise until 10 o'clock, but then like the biggest moves, there were so many days where I would make like 2-3 hours before 10, and then I would come back like at 4 o'clock to look at the day, and the move would be like 5 times bigger than the what was from 9:30 to 10. It's ridiculous.
Yeah, it is ridiculous. So there you go. That's experience talking right there.
So like, there's no reason whatsoever to trade before 10 o'clock. No reason.
Yeah. There you go. Well said. There's really no reason to be here before 10 o'clock at the open, right around the open. Everyone's just excited for it, but you've seen me as well. I've hardly taken any trades at the open in the last, I don't know how long. I think I was mentioning this even in the last session we had. All the biggest trades I've had have all been later in the day after the opening session. All of those bigger 6-figure and multiple 6-figure positions, because you're basically targeting the bigger moves And when you're entering, those candles are smaller. So then you can put in a tighter stop once you identify the right patterns and the right levels. Tighter stop, which allows for a bigger size, and you know the move tends to be more sustainable as well. And there you go. That's how you really make money. So again, guys, you got to really understand, these few things about when you want to be here. It makes it easy. So there's a couple of things. One is knowing the timing, as in the dangerous time to be in the market is around the open. Like call it 30 minutes before the open and 30 minutes after the open. So that's about 1 hour where I find it's just the most volatile and it's just a disaster. Most people just lose money. And the people who make money, well, I question them as well because it's one-to-one trading sort of thing, Mostly they make money selling subscriptions than actually trading. And then, so that's one thing, knowing when not to be there. And on the other side of it, another time you could choose to be there is when you get an alert. So set up alerts when the price gets to a certain level that you're interested in, then show up, or at least just at that point begin to look at it, which could be any time during the day. In the futures market, could be any time during the day. It's a 23-hour market, right? So you don't really have to sit here and watch it. It's a good thing to have other hobbies other than candlesticks. What do we got here? Joseph agree. Awesome. Vinay, when you get a chance, can you show how to identify levels on 30-minute chart? Vinay, where you been last 3 years, man? Been doing this every day for 3 years online live. Oh shit. Ever heard of Fibonacci levels? There you go. Easy enough.
How would you trade this setup? I mean, I know yesterday you said that you would wait for the pullback or the retest, and then do you go when it breaks the high? Or?
Sure, no worries. Let's look into it. It lines up with what Vinay is asking as well.
You can answer his
levels.
question. Yeah.
It's the same answer really. How do you trade these setups? Well, find the level you're interested in. So let's zoom out first. We've got a horizontal line here. What I'm seeing is, you see just a naked chart. You can see this consolidation area. Put it this way, it's consolidating right about in this zone, right? What a mess. You have the bottom right about there, let's say. There. It went up, it came back, it bounced off. So that's approximately the bottom. You can see that was support as well. So an interesting level. Then the top is about there. All right, fair enough. As it goes forward, you can see it went through the bottom, came right back with a hammer, and it came right back into this consolidation zone. So what I'm seeing is a false breakout of the consolidation, and the price came back in. And so you have this level, you just put an alert there, you wait for it. Once it gets there, that's when you look at it. So on the 30-minute chart, you can see it got here, about 10:30 or so on the 25th of January, on 26th of January. So let's look at this on the 1-minute chart when it gets there. On the 26th, just a couple of days ago. 26, where are we? This is 27th. 26th, what's that level? It's just about 69.70. 69.70, where am I looking? Whoa, I am totally lost with this chart. Oh, we gotta go further back. 26th, yeah, this is the 26th. The 26th, and further down. I gotta sort out the settings on this chart. Anyways, whoa. This is, there it is, down here. Gotta zoom out of this. 69.70, that's your level, right? And when it got here, at this point, you zoom into the 1-minute chart at that point in time. So it would look like this. When your alert goes off that the price hits 69.70, this is what the 1-minute chart would look like, right? It's just after the open. You can see it's jumpy, generally strong, went through the pre-market high. And again, on the 30-minute, you're seeing that this was major resistance, and it just got there right now. Now, on a 1-minute picture, this is your level. Just because it hit that level doesn't mean now you go long and put your stop below the entry candle and let it run. This is a mess. You don't enter like this. So you wait for it, and you can see very quickly in a couple of minutes, whatever momentum it had seems to be slowing down. These two candles that happened right after haven't gone anywhere. They're pretty much overlapping. They haven't moved up or down. They're just kind of sitting there. So you're beginning to think, all right, ideally this is a consolidation above 69.70. So it's holding that level. It's turning 69.70 into support, in which case you begin to think about an entry in this area with a stop right below it. And let's see how it goes. There you go. Again, a third candle didn't go anywhere. This is not bearish. This is just indecision. So you've had basically 3 indecisions. So you can see it's just not want to go anywhere. It just doesn't want to go anywhere. But it is holding above what you know on a bigger picture is a major level. Like right there. This was major resistance. And if it holds above, that's major support. So if you like your ABCD patterns, you may start taking entries right about now. You may scale in, take an entry there, small stop, small size, and see if you can scale in. That's one way to do it. There you go. Look at that one. You're getting more confirmation of where the support area really is. 69.70 is what we have as a precise number right there. But you can see the 1 minute action is giving you a little more precision, right? It's a little bit below. It's 1 point below 69.70. Right? You got that little support there, a little bit there. You're getting an idea. Maybe at the end of this candle, you can think about having a stop below this candle or below even just simply the wider one, the more previous support. So you can see you can begin scaling in. And there you go. This for me is the one I would really pay attention to, this candle. Because it went down, it even went lower than the previous support and seriously ended up bullish, hardly any selling wick on this. This is where I get really interested. For me, the stop would be below this wick. The entry is if it makes a new high, I get the entry. Let's see. There you go. So next candle printed a new high. That would be the entry, to stop below. And off you go.
Yeah,
this thing, you let
so
it
that interesting candle you talked about.
Yeah,
Are you
right here.
married to the idea that it has to close at the high, can't have the wick?
Yeah, I am. Because here's the thing.
Like
If you
that's
look
a
at my
wick, right?
charts,
Is that,
yeah,
would you consider that that's not, even though it's such a small wick?
yeah. Now you see, the thing is, you go back to it and it looks like this. Here's what I'm really trying to decipher is what is the price behavior. If you look down here, very bullish consolidation, and you can see the behavior change, right? The buyers were in charge, and then consolidation. Consolidation is basically indecision. It doesn't want to go anywhere. It breaks a new high. Okay, you're beginning to think that now the buyers are taking over. And then you can see the behavior continue. The buyers are firmly in charge, right? So here you had buyers in charge. Here you had indecision. Then you had buyers in charge. Now you have indecision. And when you have indecision, what you're waiting for is for a decision to be made. Now this bullish candle right here tells me it's very imminent that a decision is about to be made. And so then what I'm waiting for is confirmation of that decision, which is basically prints a new high. The buyers are truly able to move it up. And so they are now most likely about to take over and run it in their favor. So again, it's just like human behavior. You're watching the behavior of mood swings, put it that way. This is anyways, it's really just mood swings because it's all people interacting with price. So you can see where the buyers were there. You can see where it was indecisive. Then you can see again where the buyers were there. Then you can see again where it was indecisive. And then you can see again where the buyers are just about to take over. And these candles are the ones I like. So the one that tells me, okay, it looks like a decision is about to be made. And the confirmation for me is the new high. Ideally, even the break of the high. Waiting for these confirmations. Rather than trying to enter the bottom of these wicks and taking a few unnecessary stops, I'd rather take a later entry just to have a better win rate and go with the buyers when they truly decide. And then this one, this is an interesting candle where it came down again. And when you're halfway through this candle, it's down here. It's red. It's gone against you. You're thinking, oh, crap, I'm going to stop out. But sure enough, the big wick happened in here. The buyers stepped up. You can see the wick was down here. Then they stepped up. So once this closed, I'm likely to bring the stop in tighter a little bit. Just tighten it up just a touch. Just below the new buyers. And off you go. And here's a little trick that I like to use when I'm trying to identify basically the mood swings of the price action is when I'm looking at a long position, like in this case, I'm not looking at the tops of these candles. I'm looking at the bottoms. I want higher lows. So it's higher lows. It's telling me the buyers are just buying at higher and higher and higher prices. So that's where I get the confidence from. The confirmation and the confidence really of the buyers are stepping up. On the other side, if I'm looking at a short position or a short opportunity, I'm looking at the tops of the candles and I want to see lower highs. The sellers are selling at lower and lower and lower prices. Once you get those confirmations, then it becomes simpler. As well as I like to see the wicks, not just higher lows, but if there are wicks being put in, like in this case, that's pretty powerful stuff. Pay attention to the wicks. They tell you a lot. They really, really tell you quite a lot of what's going on with the behavior. And so, yeah, again, I'm getting all that just by looking at candlesticks. A lot of people try and get this kind of information by looking at 100 different indicators, which for me, most of the time, I find that they contradict each other and it gets confusing. This is just simple. 1 minute candlestick wicks. I mean, I do it on a 30-minute, then the 1 minute chart. And it's simple enough. And
Yeah,
even you do still, get half of it wrong. You take tiny stops, and then the few that you get are just big winners.
Yeah.
Go ahead.
So I guess maybe I'll restructure the question. The question is, I've noticed that you've always, I didn't read the book, or was it Naked? I sleep naked or something like that. Yeah. Sleep with my boxers. All right. So that book that you read said that the close of the candle has to be at the high, so it can't have a wick at the top. So that's why I'm asking you, are you married to that idea that it has to, like, would you take that trade because there's a small wick at the top of the candle, even though there's other things that are telling you to go long? And on top of that, actually, let's just start there and go to the next part.
Yeah. In this case, yeah, I think I would take this one if I was watching it in real time. Because it's not just purely that it is, there's a tiny wick there. There is a tiny wick there, so that would bring some doubt, right? But putting the picture together, I think I would take it, because what you're really seeing with this minute candle is the behavioral change. What you had in these previous 4 candles, let's look at it this way. These are the previous 4 candles. They're all indecision. They haven't gone anywhere. They all got wicks on both sides pretty much. None of them are genuinely bullish or bearish, right? This one comes closest perhaps, but it's all indecision. And then you have this one where in the beginning of the candle opened here. The first thing that happened is it went down. It was bearish. And that's when it went down far enough, that's when the bull said, all right, I've had enough of this nonsense. And they step right in, and aggression, fully aggressively, massive wick, and even beyond its own opening price, and really aggressively gone all the way up there. All that in 60 seconds. From the bottom right to the top, and closed just about near the top. You see, this is the behavioral change. So every candle is a story. These are just 60-second stories, really. You're trying to read the story. It's like watching a movie, right? Every scene in the movie, in a murder mystery, for example, something like that. You gotta read more mystery books, man. It'll help. Anyways.
You gotta read a book. That would help. And then we could talk about
read a book. Oh, man. Yeah, so, it's a story in behavior, really. So you're really watching to see what are these buyers and sellers doing, and just think of it as human behavior. I mean, we're all used to human behavior. We've been on this planet long enough. We know how to interact with each other, how to read human beings. It's the same thing. That's how I'm seeing it. So change in behavior at a key place on the chart. That's basically what I'm looking for. And then the candlestick book, the naked trading book is very good. It gives you the basics of how to get started with naked trading. What are the candle patterns to look for? A great place to start. So when you see the great big hammer in the right place, okay, that's an opportunity. But once you do that enough and you start refining it a bit, at least for me, it's come down to behavior, price behavior, which I just take it the same. I take it from nature. It's the same as human behavior. People are tired. They need to rest. Then they find their energy again. Then they go again. That's called, here it is. It goes, it rests, then it goes again, then it rests, and then it goes again. Pretty healthy stuff, right? But rather, if you just keep going, you're going to burn out. You can't go anywhere. It'll just fire back on you. So that's how I'm seeing these things. Not too complicated. But that takes a bit of time of doing it for a while, so stick to it. Then go ahead.
On that 69.70 level, it's consolidating around it on the 1 minute. Would it be ever a good idea to watch it consolidate around that 69.70, break it, and then come back for the retest for the bigger move?
Oh yeah, that's fine
Okay.
too. I think that's a good way to go. So let's see if all that happened here. So you would wait, you would identify this as your high, and let's see if it breaks. Okay, there you go. There you have a bit of a break. It's a tough one because there's still sellers overhead. Next candle comes right back in, but still, again, like I said, very aggressive. You're not seeing this as a retest. You want to see a real break, move a little distance, come back, and then retest. So I'm still not considering it that it's broken out. It's still struggling at this point. Let's see. Here we go. Now it's holding above a little bit. That's interesting. Let's see if it really wants to move. There we go. So this one is interesting because this printed a new high. It closed back inside, but look at that was the previous high right there. It's even printed a new high. Now this is an interesting one. If after this I see some sort of hammer where it bounced off that previous high, then I would consider that perhaps a retest.
Gotcha.
Okay, there you go. Now firmly it's a breakout. You're not questioning it anymore. It's on the move. It's not pushing down. It's actually putting in higher lows, right? So it's on the move. Let's see. There we go. That's interesting. This candle where it came down and it bounced off. Where did it bounce off from? Approximately the previous high. Didn't quite get to that one that we were talking about earlier, but the previous high. After this one, you may consider it may be a retest of this tiny little high that we have, and then you're trying to identify momentum to the upside to enter. I think this overall is a very tricky kind of retest. It's not as clean as you'd like it to be, right? You still got wicks on the upside. You got this hammer, which is, again, still a bearish candle because it's got the closes below the open. But in this case, this is how the retest has happened. See if you can get involved. See, now it's gone nowhere. You want to be careful with this. And if you're entering somewhere here, let's say, where is your stop? Would it be below this previous high? Would it be below this buyer down here? Would it be all the way down here? That's the safest one. Maybe use this high, put it down below in this area. Are you scaling into a position up here? Those are all questions that you got to ask yourself, and there's no wrong way to do it. But when you're entering these positions, you got to ask yourself these questions of where's a stop that makes sense to you, and with that stop in place, then do you get a good RVR then based on target? And if the RVR is no good, then don't even take it. Don't bother. Even though the price action may be perfect, if the RVR isn't in your favor, the potential reward isn't there, forget about it, man. It's not going to work. So anyways, let's see how this transpired. So now look at this. It's just consolidating, right? It's a real struggle to consider it a retest of a breakout. It broke out, and now again it's consolidating. Let's see how this flows. Still not going anywhere. That's the interesting one. This time where did it bounce off? Again, similar area where you had previous resistance. This is your bullish candle where it went down. The sellers, so the buyers had enough. Very bullish. I may enter at the top over here as it makes a new high. My instinctive stop, I'd say definitely below this candle and looking further to the left. I'd like to put it below this little candle here. So I'd probably put it in this area with this entry up here and the stop down here. Now, if I have that idea in mind, am I still getting at least 3 to 1 based on wherever I identify my target? If that's the case, then yeah, sure, put it on. There you go. There's your entry, and the stop would be down there. It actually printed a new high, so I'd probably move my stop in a little tighter after this candle closed. So perhaps at this point, it would be below this candle, the entry candle, or right of this bullish candle, or perhaps below this one right here, the previous support zone, just about there. And let's see, no, that would have got you. If I had moved my stop in tighter, that would have got me right there. And it would have got me anyway. So you can see in this case, the retest has happened in a very tricky kind of way. You would have taken it maybe once, maybe twice, stopped out, rather than trying to catch the breakout. If you caught the breakout here or in this area, the stop below it, you'd still be surviving all this stuff. So none of it's perfect, but at least you have a method, right?
Yeah. Yep.
And
I mean,
may not
even
even
a retest like that. So no, that's
Yeah,
very
it's a tough-
interesting.
I think a
That's
better entry was at 69, 64, I believe. That was the level that I had
Yeah.
marked.
Mhm.
And yeah.
Okay.
That
Yeah, if you
was a
had that,
cleaner breakout, and it got messy around that 67, 69.75. It got
yeah.
messy. I got stopped out there too.
Yep, it got messy, and again, the key thing is your level. Once you have your level in place, then you're looking at it as an area. You don't really identify a level as a precise point, right?
Yeah,
It's an area. If you had that level, sure, in this case, this would have worked out for you. If you had a level up here, then it's only here that you're looking at it, and it would have been a tricky one to enter, 1 or 2 stops. And here again, you may have identified a retest where you can see it broke out, it came back, then it got indecisive, and this is your first bullish candle right here, bouncing off approximately the previous resistance. Entries up in here with the new high, the stop. I'd probably put it below this candle and fairly quickly move it in. And this is the one that may have worked after maybe 2, maybe 3 stop outs, but then you get 5R on the next one or whatever it may be, and you're on your way.
Could you look at the 30-minute chart and look to the left? I think that level must have been something before. Like
What do you mean something before? Right here? This is the level we've been looking at.
yeah, I'm talking about the 69.75 area.
Oh, okay.
Was there something to the left?
Right about here. Yes. Look at that. This was previous support right in this zone.
Yeah, I think that's why it was so messy there.
That makes sense. We could have a level here.
There was a lot of resistance before.
Yep. Yeah, I can see that. This was previous support, broke down, and then it got back up there, and it's turning it into resistance, getting really messy. You can see on this 30-minute chart as well. And yeah, really tricky to get into this position, looking to the left. But here's the fun part. We identified these levels. You have this one here, you have this resistance here. Another way to do this, and probably, I don't know, a way that, to my mind, these days makes more sense, is look at real-time price action. So again, we talked about levels, and you guys have seen my webinars on the traumatic levels. If you look at traumatic levels, you're looking at what is the most recent point of trauma. And on this chart, so you're looking at recent activity, you can see what it's done overnight. It's been basically bullish. And here's your resistance. It came back in. And as it goes back up to that most recent resistance, again, traumatic levels means what's the most recent point? That's over here. It comes back up to that most recent point with higher lows, with the buyers truly taking over. So at this point, you would think, all right, let's put the level there, and let's see how it behaves. If it keeps going with higher lows, you may have an opportunity here. But if you are going to look at this as an entry, you know you have overhead resistance, right? 69.70. So make sure your entry is okay. Otherwise, you don't take it. You don't necessarily have a lot of room to target. So look at this. This is 69.50. And this is the day. 69.50. Now, all this seems to happen before the open, did it? Here. Got to it here. Yeah, just before 9 a.m. Very interesting. So on the 1-minute chart, but first we look at the 30-minute chart like we saw. Where did it go? 30-minute chart. It's getting back up to the level with higher lows. Key point. And then when you go to the 1-minute chart, 69.50 right here, it's getting back to that level with higher lows as well. You're getting the same picture on the 1-minute as you saw on the 30-minute. Now that's a fractal pattern at a traumatic level. I mean, this is precision stuff. Again, you guys have seen my webinars on this. So this is actually near perfect. Gets there, higher lows, consolidation below the level. Here's your breakout. Here comes close to a retest, and off you go. Using just the most real-time price action, as in paying attention to it in the moment rather than in the past. And this is what you get. In this case, 69.50 would have entered here, the stop, if you're entering the breakout. And I think this is a decent breakout to enter. This is one that I may enter. Normally, I like to wait for retest, but this one, because these higher lows all the way, and then even here, this tiny consolidation with a decent little top here, and higher lows in the consolidation, just in these 5 or 6 candles right here, you're getting a lot of information. So then the breakout happens, I'd probably put a stop below the consolidation, and then off you go. 69.70 is the first major target. And then perhaps see if there's a way to add in again without risk and continue this thing going up. So that's most likely the way I would like to trade this. With futures, this is possible. With options, it's not, because options only open at 9:30, and then you're stuck with opening volatility.
If you,
So,
sorry,
yeah, go ahead.
if you've gotten in at 69.50, what would be your target, and what would keep you in the trade? Would you
Yeah,
get
so
out like around 7,000, or
Mhm.
or would you let it go?
Yeah, so 69.50, if this is the entry area, the top here, 69.70 would be a target, right about there. That's 69.70, just about there. And then looking further to the left, where was recent resistance? If it continues, I see the next area right there, 69.77-ish, 80. So in this area, I can put a few orders to sit. But I'm seeing really heavy selling up in this area. You see this wick here? Right there. There's a big wick, just under 7,000.
Yeah.
So you can see that's a good target. So if you're entering somewhere here, your target's here, you got another one a little further up in this area, and then you're getting close to 7,000. You can stagger orders out basically bit by bit, every 5 points perhaps, up to 7,000. And well, it would have closed the day down here. If you have the ability to hold through the close, and it slammed into it. So, and this is interesting as well. It came back in a retest of approximately of previous resistance, and it goes again. So that's how I would look at this.
I think it did it at 9:30.
Yeah. So there you go.
Yeah,
Not too complicated.
That 30-minute candle was at 9:30. The indecision one.
Down here?
Yeah, right there. That one.
So it's 6:30 on my chart. PM. Oh wait, this is 6:30 Eastern PM.
Oh, that's 6:30
This is
p.m.
the
Okay.
close.
Oh, that's
Yeah.
right. That's right.
This is
My
futures
bad.
market.
Yes.
Yeah. Yeah. So again, it's not too complicated. Just know what to look for. To be very simple about it, there's only two things that happen. It either goes sideways or it goes directional. In this case, look, it was sideways here with a false breakout, and it goes directional. And that's all there is, really. And here's a fun one. As you guys, again, I've done this 1,000 times in the webinars. If you identify your consolidation, we identified the top here, right? Now, if you put the line here, this is the bottom of it. So it's just stuck in the zone, and then it drops and puts in this hammer. Now, this happened at, what, about 6 p.m. Eastern when the market closed, or rather, when the market reopened at 6 p.m. Eastern. This was the first candle. Massive hammer, right there. And we know the whole Wyckoff structure thing that we've gone through a million times. When you have a consolidation, if you have a false breakout on one side, it likely leads to a genuine breakout on the other side. So the fun becomes then, once you identify a consolidation, you wait for the false breakout. This is then your perfect one with a hammer. You can get in as the support area right here is reclaimed. It's from here, and you can see with the hammer, then it gets reclaimed around here. So let's go into the 1 minute chart here. You might have an alert, and it'll open up to you at what, 6:30 p.m. Eastern, and you can look at it here. Let's see if there's an interesting point there. What do we have? What's the level here? About 69.12 on the 25th. That's just a little further back from what we were looking at. Going into 69.12. It really dropped. There it is. On the 30-minute hammer, you saw that. This is what it looks like on a 1 minute chart. Let's zoom in a bit. Whoops. Oh, man. There it is. So that would have been that big 30-minute hammer that closed right up here. And you're looking for it to hold or reclaim and hold around this area, 69.12. So let's see what happens. So when your alert buzzes, it would actually still not buzz. Here it's 7 p.m. Eastern. It would have buzzed. Maybe here you would have put it. There you go. Now for sure it would have buzzed. Okay, about 7 p.m. Eastern. What are you seeing now? This was the previous support of that major consolidation, which you have here, this level, right? So the price went dropped below it, came back up into it on a 1 minute. There you go, dropped below it, came back up into it. And you're seeing on a 1 minute chart, this is approximate resistance, right? Right about here. And basically you're looking at a breakout and a retest. If you can find that, you're into it. And you can put this on at what, 7, 8 p.m. Eastern, go to bed and let it run. There you go, a little breakout. Let's see, come back and retest the breakout area just about here. So it went up, it's coming back down. There you go. That's the behavior change that I would like to see. So you can see it broke out of what was firm resistance, struggled, pushed back down, and bounced off almost precisely. Again, that was resistance. Here's your bounce off. I really like the buyers down here. I would still be a little cautious. It got a bit of selling up there. Even the previous one is a bit of a reverse hammer. So I'd wait for a bit more confirmation. Perhaps a new high up here would be an entry, or at least watch it and really watch it closely. If there's tremendous momentum coming in fast, then maybe an entry. Or even take a new entry on the new high, but have a wider stop on it, maybe down here. Let's see what happens on the next candle. There you go. It actually printed a new high. So that would be a good confirmation. I would probably enter at the top of this wick over here, most likely, with the stop maybe here, or at least below this previous resistance, so down in this area. And then, yeah, let it run. And then you're going up through the levels like we talked about earlier. The first level would be here, 69.70, because you know that was previous resistance, and then off it goes. So what was it? Yeah, all this stuff. That's how I would look at it. So the entry would have been, where did we say? Can't remember now. Here, right about in this area. And off it goes. Before the open, it's already 20R in your favor. Yeah, and then off you go. This is already 4 a.m. and stuff. So these are ways to try and take these trades. Again, the opportunity is that it's the futures market, which is open 23 hours. You know, for me, it's what, 7:20 a.m. And there's probably a setup somewhere on some ticker that I haven't looked at yet. It's not difficult to put it on, and then the market will open in about 11 hours from now. You can make 50R on a single position, just waiting for it. Just let it run like this with these tiny candles. So, again, not too complicated. It's slow, it's boring, but it's profitable. Rather than, again, getting excited at the open, full of anxiety before the open. It's like most of you lose 20 trades before the opening bell already, just emotionally, because you're so anxious. So this is a nice, simple way to do it. What's going on here in the chat? I'm missing all these things. We're looking at Fibonacci levels. The book. Okay, you guys got the book, Naked Forex. Yep, thanks, Joseph. You got the ebook, Amal? Good. Listen, on that book, it's Naked Forex. So the chapters that make sense to me are just about how candlesticks work, how to use them, and how to find levels, rather than, and there's other chapters which are useful for the Forex market. Like, what is the Forex market? What's a Forex broker? How does it work? Those chapters are unnecessary if you don't want to trade the Forex market. So you don't have to read the whole thing. For me, the useful chapters were basically trade management, trade setup, identifying levels, targets, candlestick patterns, those things. What do we got here, Evo?
20 and ask Avi what the book was about.
There you go, 80-20, man. 80-20.
Yeah.
That's good. 80-20. Ask me or watch
Ask a friend.
Yeah. Or watch the webinar recording at twice the speed, you know. Watch it in 20 minutes, you're done. Easy.
Can you go to yesterday's, I guess the opening for yesterday? I know you don't take trades in the open, but
yeah,
just wondering if you would take the break or the retest of the previous day.
Yeah. Just a moment. Let me just catch up on this question here, and then I'll answer that one. We'll look at.
Yeah, I don't want to hog the mic either, so guys, ask questions.
No worries. I got you. Evo is asking, speaking of the open, purposely arrived to you trading as 15 minutes prior to the opening bell. Use the 5-minute time frame. Keeps you out of trading the opening bell session. Good. Learned over time the setup needs 30 minutes to develop anyways. No more 1 minute. Okay, very good. There you go, guys. Evo's found success by staying away from the garbage. Very good. Interested in not interested in Forex. Okay, I'm on. There you go. Yeah, Forex is another world. Not a world I've explored in detail, but it's there. All right, you're saying the opening bell of this was here, 9:30 p.m. Let's go on a 1 minute chart. You want the open. Where are we? AM, 9:30 a.m. Okay, right here. Are we just looking at this? All right, 30-minute chart. No, we were just looking at. No, this is. Oh yes, this is the next day. So you're asking the retest of what the previous day's high? Is that right?
Yeah, right there. Yeah.
Yeah, right there. Yeah, actually, we were talking about this in the live market when this was all happening. But yeah, so
Yeah, because
yeah, this makes sense.
go ahead, man. No, I was just gonna say, just touch on this, but like this is the part that gets in my head. But once it retests and it doesn't make a new high, like it did an overnight session. So I don't know, those consolidation candles at, I don't know, it's probably like 3 a.m. Eastern time, yeah. And then
Yeah,
to the right. Keep going to the right. Yeah, right there. See, it doesn't
yeah.
make a new high. It comes back down.
Down here. What are you
No,
talking about? This was the
yes,
previous day's high. Then you had the overnight high right here,
correct.
right?
Then it comes
So
back down and retests.
yes, over here,
No.
earlier
Like
here.
like 5 candles after the high.
Okay, yeah, it comes
No.
down.
Keep going left,
Doesn't
to
make
the
it
left, to
right?
the left,
Oh, to the left.
to the left, to the left. Yeah, right there. This
Okay,
candle's
here.
right here. Yeah, it goes up, comes back down, retests,
Mm-hmm.
and then it doesn't make a new high.
Mm-hmm. Yeah.
Do you write that off as like this trade? Like, does that not follow in your trade book because it did not make a new high? So you don't take the retest again? Because then we can just keep taking the retest and blow up the
Yeah.
account, you know?
Yeah, I know what you mean. This is tricky. This is overnight action. So the way I look at this, I'd say, well, you have the obvious level here, breakout, retest. Let's see, the breakout. What you want with a breakout is you want it to go some distance. That's a genuine breakout. It's a momentum situation. So you start with that. So you have this resistance. As the breakout happens, in the first instance, you can see it pretty quickly went some distance at least. So you confirm to yourself, right, the breakout's done. Now when it comes back, this is all the 30-minute chart. There, it came back, it found some buyers, but it's really not done a retest here. You're waiting for some bullish activity. That's your bullish activity. If you're just trading a 30-minute chart, you may take an entry up here, perhaps, as in the new high with a stop below the level. And of course, the target would have to be further out. Now, there you go. You would have had that entry, and it's failing to make the new high. Instead, it actually has come all the way down. And so if this bothers you, one way to do it is just close the position. Now your stop would be down here, but the moment you see a bearish candle close like this, if that's making you nervous, there's nothing wrong with shutting down that position prematurely. This is risk management, right? You shut it down, let it go. And then you wait and see for a couple of things. You're still looking for the retest. If it comes down with room to the left, it puts in a wick down here perhaps, and it goes. Or if it doesn't, and then it's stuck here, it's got no room to the left, it's just in consolidation, in which case you don't touch it. So there you go. You have this indecision. This is not what I call a bullish wick hammer candle. And look at this. This is all indecision now. Now you can see it's getting into a place where it's stuck. No room to the left. No nothing. So you're getting this bullish candle. This is where I may enter. But if you don't like the fact that it didn't make a new high already, no big deal. Just leave it alone. You don't have to play with it. You can see this is all just a junkyard now. It's not going anywhere. It's even going lower. Okay, there's your first one. It did do that bullish candle. It came down, put in a big wick, and a seriously bullish candle. And yeah, it even printed a new high. From here, perhaps, you may think, all right, the new high is the entry. The retest is complete, and the confirmation of the retest is the next candle or whatever candle makes the next new high without making a new low. Your stops below. And then you go. Of course, this is a 30-minute chart, which is much, much bigger. So again, to answer your question, if you're nervous about it, the retest not making a new high, but instead you're actually watching it actively and you're noticing it's putting in bearish activity, Nothing wrong with taking off the position and re-enter it later if the setup happens. And in this case, the setup doesn't look like it would have happened for another, 6 or 7 hours or something. And in that case, put some alerts in place so you can watch it. So put an alert maybe down here in this area. So if it pops out of this consolidation, comes down, then you start watching it. And you can watch it during this 30-minute candle and see how it closes. And then you have your entry. You can do something like that. That's no big deal. I think it's a good thing. If that's one of your rules, I think that's fine.
Yeah, just remember one thing that you said stuck with me is we always look at when to enter a trade, but we never really think about when not to enter a trade. And so I was just wondering, what are your criteria to not enter the trade?
Yeah, the simple one, the one that keeps me out of a lot of garbage is room to the left. Don't enter it when it's going sideways, when there's no room to the left. If you look at this chart here, like this, all these candles, there's no room to the left. This is just in consolidation mode. It's not going anywhere. And it could wick around and stop you out 3 times. You don't want to play with this. Room to the left, I think, is quite important. So just looking to the left and seeing that there's space, that it makes sense, and you can enter. So look at it in this instance here. For example, if we were looking at this level right here, right? Now, when the price got here and it made the new high right up above this blue line, there is room to the left. Hasn't been here in some time. And also add to it, the most recent activity is on the move. It hasn't been stuck and consolidating. It got to this level with higher lows. It's all there. Look at it in another way. Let's get this out of the way. Look at it about here. And you know what? Let's put it here. You got a level here, pretty obvious resistance, and gets there, right? And starts putting in these wicks and lots of tiny candles. Not a lot of room to the left. Very difficult here, I think, to find an entry. I might just wait for the breakout of this nonsense and then go from there. So during these 3 or 4 hours, you're watching these candles, and basically all candles have wicks on both sides. And none of them are making really new highs or even new lows, for example. It's just no room to the left. So this would be an area where I would hesitate to enter. I would wait for the new breakout high, which would be in this area, I think. In which case you take one stop and that's it. So staying out of this, but if you keep entering around here looking for your retest or breakouts, well, you're going to end up in a bit of trouble. So room to the left is a simple one. Nice and easy. Again, it comes down to human behavior, right? When you have no room to the left, it's just telling you that the price is in its comfort zone. It's happy to stay there. It doesn't want to go anywhere, just like a human being. Human being in a comfort zone doesn't want to go anywhere. Sit on the couch, eat popcorn. Not going to go anywhere. But you push a human being outside his comfort zone, what you find is that the person doesn't want to be there. The person's going to be on the move, going to either continue moving forward or go back into the comfort zone, one or the other. It's not going to stay there. So at least there's an opportunity for a move. So think of it in those terms. Again, all this is in the Naked Forex book. That's where I got it from. And I think that little rule just works. It just helps a lot, not getting into it. And even then in other situations, when you do get room to the left, the other thing that keeps me out of positions is there good RVR? So for example, let's say over here, I'm trying to enter on this new high because that's where there's room to the left. But if my target is just over there, I'm hardly going to get it 2 to 1. What's the point? If the target's further out, then okay, 10 to 1, it's worth taking the opportunity and take the risk of one stop out. No big deal. So those are 2 things I personally look for: room to the left and good RVR. Otherwise, I'm not going to enter it, even if the setup is perfect. So I hope that helps. Yeah, this one, bit of a mess, huh?
It definitely has helped me, Avi, with my trading to look left of the chart. So I'm trading the chart, not trading what's beyond the chart, because if I trade with the chart and I look to the left, my odds are that I'm going to increase my my R's big time. And
there you go. Nice.
What really attracted me to you a long time ago when I first heard you at the other organization, you were talking about that, about going beyond making 2 or 3 R and the simple scalping breakouts. So I really had to pivot my strategies and become a part of the buying brigade and waiting for those setups to appear. And yeah, I've just noticed when I wait for that, and I trade to the left, and if I'm buying at a level where it previously bounced and it's got room to run, then yeah, those are the big earners.
Awesome, man. Well, congratulations, man. Sounds like your trading has evolved, and sounds like you're happy about it. You're able to do it in a simpler way where it's not stressed out, or you're not stressed out. And,
It's still
yeah,
still learning, man.
of course.
Always looking for. In this kind of reversal idea, I'm always looking for like anomalies to tell me that the sellers have exhausted. And I want to be able to get in before confirmation. But I know you're not a fan of volume. I am. I use it on my chart. And I feel that it helps me. And if the closing price and the low of the red candle is pretty tight, and I have an anomaly in volume in which I have a dropping volume for that red candle bar, that tells me the sellers have exhausted and the buyers are going to step in. And that's where I can have a boatload of shares, because if my stop is only like 3 or 5 cents, I can buy a ton of shares. And if it's got room to the left to go, I can make a ton of money. And by having a pretty tight stop, but there's certain things that I look for so I don't get tricked out.
All right, no, that's great. So what you're using as a confirmation signal is volume. It's not that you're entering before confirmation. Your confirmation is volume, is the anomaly in volume. My confirmation is the price, the new high or the new low. So great. If you're getting results with that, that's good. Stick to it and continue to refine it. And it's not that you're not using confirmation. You are. It's just a different confirmation.
I realize it. Yeah, thank you.
Yeah, that's good. And that is interesting. That's something we don't talk about a lot in here, using volume simply because I don't use it. But since you are using it and quite effectively, let me know if you want to do us a little webinar or a little presentation on how you're using it and what you're seeing and what's working for you. That would be fun. I think that'll be useful for everyone in here. What do you guys think? Would that be fun? Have Ivo talk to us about volume? So I'm not going to
Always.
Let me get under my belt, so I'm worthy of doing that. And yeah, I'd be happy to, but give me some time on that. But yeah, that would be awesome.
Yeah, sure. Whenever you want, no problem. Just reach out to me. We'll sort it out. Cool. All right. Good stuff, guys. Fun. All right, let's quickly look at some of the other real-time actions, see if there's anything worth looking at. This is the Qs. Already broke out while I was asleep a few hours ago. This would have been a good one to enter. Breakout, go. This is a Russell. I'm struggling to see anything on this. Even yesterday, while we were looking at it here, I think at the open, I was saying it's just no room to the left, tricky. Leave it alone. This is oil. Ooh, oil's interesting. Look at that. That's an obvious traumatic level. A few hours ago, major resistance. Breakout looks like it just happened now while we were talking. I'm looking to the left to see overhead price targets. I don't see anything really. So up here, perhaps 62-ish. So I put 62 in as a target if this is a trade, and we're already above it. Yeah, this all-time high basically on oil. Yeah, we got real time. Let's see if we can get into a position. So let's get into the 1-minute chart on oil. What do we see here? Oh, man, you know what? I might switch this platform, go to TradingView because it's so ditzy, this thing. All right, so the breakout happened. You have this resistance, higher lows, breakout, go. This resistance, breakout. Man, these charts, these candles are so tricky to read. Very difficult. I mean, how do you trade this, you know? Every once in a while, you're getting a good neat looking candle like here, or maybe this one here. What is interesting is it broke out. Again, bigger picture, 30-minute chart. That's the breakout right there, and it's holding above. Let's identify the level. We have 62.75-ish. 62.75, so it's holding above. So if I'm going to take this entry, I'd put the stop down here, probably 62.70, giving it plenty of room. That's where I'd like the stop to be. That would make sense. So it would be down in here below that resistance. And then targets, how would you measure targets? Let's see. I'd put it down here, 62.30, 62.75. So at 45 cents from 62.75. I just put the target here, about 63.20-ish, somewhere up here. If you're getting that entry here with a stop just below, there's plenty of RVR, right? 63.20. Makes sense. So far, the price action is okay. It's very difficult to read this 1 minute chart. But again, give it room. You got the RVR in your favor. So the entry here, the stop down here, and the target up there. That would give you about 3 to 1, approximately. But what is the genuine opportunity that it's moving now? It's on the move now. This is where I think Eva would come in with the volume and tell you there's no volume, it's not going to go. Something like that. But this is when those slow, sustainable moves do happen. If we were watching it here in this area just 15 minutes ago, I think I really would have entered this because the shape of this action is really good. This is a bit of a unclear where you can see on the 1 minute chart, there's no room to the left. It's just kind of stuck, right? Man, why did you guys tell me this 15 minutes ago? Would have taken on a position because the entry would have been in this area, the stop down here. You can still enter with a stop down here, but it's not likely to go. So again, that's the usefulness of alerts, right? It would have popped up an alert 15 minutes ago. We would have looked at it and put it on. But now it's almost there. I would take it, but it's almost there. It's not there. If it pops down again, puts in a hammer, that would be the opportunity. See, what about gold on the move? Gold, same thing, broke out a few hours ago, put it in the top. So we'll let it pump down over here, put an alert in this area. If it comes down here, you're waiting for that retest. On a 30-minute chart, it looks like a retest. On a 1 minute chart, it would probably look like a reversal. Silver, what am I looking at? This is just messy. Well, it's interesting. Real time, it's been putting higher lows. Breakout just happened again. That is interesting. What are we, 114.4? Breakout happened in the previous 30-minute candle. Let's look at this. Here, 114.4. That's your resistance. There's these higher lows. Here's your breakout. This is a retest. Oh, this is more interesting than oil. This actually might be in the right place. Real quick, targets way overhead, about 117. So let's say if there's an entry here, 117 is the target, which is up here, okay? So what you're looking for is a tight 1 minute entry. So this is a good one, I think. So resistance, it got there, consolidation, here's a good, neat breakout. Here it comes back for the retest. Hasn't printed a genuinely bullish candle yet. This one got close, just the previous 1 minute candle. So here again, as it comes back and ideally goes sideways a little bit, puts in a hammer or some genuinely bullish candle, maybe something like this. Then you have the entry up here. I'd like to put the stop below these buyers down here. So if they're pushed out of the way, you're not in it. And the target is 117, which is overhead. So it's the kind of thing we sit and watch it now for the next 15 minutes or so and see if it does that, gives you that action before you enter. So there you go. You put on these trades, and this is, what, 11 hours till the market opens. By then, you're done, ideally. I think the longest I held a trade was about 12 hours, something like that. Anyways, that's that. Cool. Anyone got anything else on your minds? Anything you'd like to discuss? Everyone good? Everyone know what you're doing? Most of you got to go to bed now. Wake up for the open.
Well,
Cool.
I'm not trading the open anymore, so
Smart man. You can see how much easier this is, man. Just looking at it like this, slowly, you don't have to trade the open.
yeah.
And you can keep
But
your day job.
I do have to wake up for the day job.
Yes. That's fine. Keep the day job. I suggest keeping it until trading sustains itself, you know, so you don't have to stress on it. And you can Yeah, you don't have to stress about waking up before the day job to trade or any of that stuff. It's easy. It's there.
Exactly.
Cool.
Avi, do you
All
use
right,
the
guys.
ATM strategy on the mobile app?
Yeah, I do. I have used it. I've played with it a few times in the sim. Again, I'm not convinced of the app. It's a bit shady. I have put on trades. I've even put on a couple of live trades using it. It's okay, but I've gone very small. I haven't risked any real money on it.
And you can use the ATM strategy, like it'll
Yeah,
move
yeah.
your stop to break even. Oh, nice. Okay.
it's all in there. It's all in there. But I think I might move to trading view because I think the interface is a little simpler to use.
Yeah, for sure.
This
Trading view is
Ninja,
dope.
yeah, trading view is good. I'll just link my Ninja account to trading view, and I think that's not much to do. I'll figure that one out soon.
There's
Especially
your
as I'm
candle.
getting close.
There's
Is
your
this it?
candle, man.
Is this my candle? Let me see. Yeah, it's happened in the right area. It's happened. Okay, good. That's a silver. This is a heavy count. Anyways, I want to do a sim one. So let's get into it.
500.
Yeah, print by 100 contracts. You want to buy 100? Okay, I don't
500.
think 500. No, each one of these is a lot. Let's go with 100. Let's see what 100 looks like. It's massive. Yeah, it won't even the sim account won't even tell me I can take it. Let's go with 10. Yeah, so this is the intro. Should have been 30 seconds ago. Oh, look at that. Dracula is laughing at me. That's the notification on the phone. Yeah, you can see these contracts are very heavy. All right, stop was, where did I say? That's the resistance, that's the candle below these buyers. Okay, so stop. There we go. Down there. And as it breaks out new highs, I'll bring it in tighter and tighter. And the target's up there. At this point, the target looks like about 3 to 1. It'll move in pretty tight, pretty quick. And once it's in break even, that's it. Just let it run for 117. Cool. Yep. Thanks for the notification, man. I wasn't even looking at it. Cool.
I am your alert.
Yeah. Thank you. I love it. I don't have to do nothing. Just buzz me anytime there's something to look at. Cool. All right. Fun stuff, guys. Thanks again. Good times. So take it easy. I'll get this recording up, sorted up soon today. And I'll talk to you all again soon. Thanks again for hanging out.
Have a good one. Thank you.
Take care.
Thanks, Avi.
Thank you.
See you tomorrow.
Thanks, man.
Thanks, guys. Yeah.